ENPHASE earnings. We were just down over almost 13% almost at the low. ENPHASE is currently down over 11.5%. I think this is a huge overreaction. I've already bought 50 more shares to bring my average cost from $100.50 to $95, and I have a limit buy to buy 50 more shares at $80, which will most likely be bought up tonight or tomorrow. I think this is a huge overreaction. So yeah, year over year, ENPHASE looks terrible. It's red everywhere you look. I mean, revenue red, down what? We're down like I think 50% on revenue year over year. And that's to be expected, though. I mean, yeah, these numbers year over year look terrible, but that is to be expected. We did not expect ENPHASE to be green, okay? 2023 was its peak, and 2024 has been absolutely brutal because of interest rates. 2025, these interest rates have started to get cut, right? These past couple months. Check out ENPHASE's earnings, okay? We're bottoming right there in Q1. We're on the rise, and it's missed. It's missed all of these quarters, but it's still rising. Gross, you guys want to talk quarter over quarter? Quarter over quarter looks great. Year over year is all red. Quarter over quarter, we're up 25% on revenue from the second quarter to the third quarter. Up 51% on EPS. So, a more long-term standpoint, year over year, we look awful. But quarter over quarter, we look great. And I think it's because we've already bottomed. Now, right now, we're kind of just having a earnings compression. If you look at the earnings ratio, it was almost 99 for the PE ratio. Now that we've dropped 12% and the earnings have grown a slight bit this quarter, I think our PE ratio is going to shrink a lot. I think our PE ratio is sitting around 40-ish right now, give or take. I don't know. I see this as a good buying opportunity. Quarter over quarter, we look great. Guidance was a little Revenue for guidance, we're looking either to stay flat from the third quarter to the fourth quarter or slight growth. They've predicted for $360 million to $400 million. We just came out with $380 million this quarter, so if we hit $380 again, that'll be a flat growth. Gross margin, Q2 was 47.1%. Gross margin this quarter was 48.1%. So revenue's going up, EPS is going up, gross margin, non-GAAP, is also growing up. All these are non-GAAP numbers. I think we've already bottomed. I think this is we are on the come up. I think the only downside to this is the 2025 rebound is going to be slower than anticipated. Yeah, all these interest rates are getting cut, but I don't think we're going to grow as fast as we once thought we were. I just think that's going to be the downside. So if you're holding shares right now, I do think we could easily get back to $100 pretty soon. But I'm talking like, mid hundreds, 200s. I do think it's going to take at least probably another 12 months, probably towards the end of 2025. But I believe this quarter we are looking at around $2.30 on the EPS guidance, and 2025's is predicted to be $4. I think it was around $4.50. So I mean, it was from the EPS of 2024 to the EPS of 2025 fiscal year, you're looking at over an 80% growth for 2025's predicted EPS. I think it was 83% growth, which is awesome. And then 2026, which is even further out, which is honestly harder to predict, they're predicting another 20% on top of that. But I'd like to take it 1 year at a time. I like to look at a company from 0 to 12 months out. I don't really like to look at it past that because there are economic headwinds or tailwinds, and stuff just gets a little too unpredictable past 12 months. Honestly, 6 months is more realistic, but I like to do 12 months just to kind of know what I'm getting into. But yeah, I wouldn't really look too far into the 2026 yet until we see what 2025 has in stores for us. But I am down to like $1,200, but it was in the money at the time when I sold it. As you can see, I had a $955 credit, and it still says there's $430 to collect. So tomorrow, when the market opens, this call, since it expires on Friday, honestly, this call will probably be almost worthless. It might be worth like probably 10, 15 bucks, or I'm sorry, 10, 15 cents, but it'll be $10, $15. So I will probably buy to close this, get another 50 shares, and then I will sell 2 covered calls. So this, I'll have to factor in, since when I owned it at $100, I know this $955 brought my average cost down to $91. But now, since I'm averaging down, it should bring my cost even lower. I'm just going to have to run the numbers again for the 200 shares and really see exactly what it is. But yeah, I'm super excited to be selling 2 covered calls on ENPHASE. I still have this Tesla put. I believe they have earnings tomorrow after hours. So, wrong thing. Here, let me view the actual stock. So we have this as well. Will I be buying it, or will I just collect the thing? Tesla's sitting at a 61 PE. Wow. And Tesla's in the same boat. All these companies, look, bottomed at Q1. All these companies that involve the consumers buying something from them, they all are affected by interest rates. Tesla and ENPHASE are 2 great examples. You look to the left of Q3 and Q4 of 2023, Tesla's doing pretty decent. Q1 2024 looks like we've bottomed out, just like ENPHASE. And now look, they're missing on earnings, but they're still going up quarter over quarter. And that's really the picture we need to be looking at, is quarter over quarter, right? Year over year, it's going to look ugly from interest rates. But quarter over quarter shows that we're rebounding, right? We've hit the bottom and we're rebounding. These earnings come out tomorrow. Will we miss? Will we not miss? Who knows? I could see Tesla falling as well, falling probably below my 205 strike. Who knows? But I do think they're going to grow from Q2, which is the most important thing. As long as you're growing quarter over quarter, I think that is the most important thing as of right now. And there's huge tailwinds ahead for ENPHASE and Tesla. I think interest rates are predicted to get cut. I believe it's around 1.5% for 2025, which is huge for both of those companies. That will help them really get their revenues going up and all that. But ENPHASE, I mean, it looks bad from the year-over-year picture, but quarter over quarter, we have revenue increasing a lot. We have EPS increasing a lot. And we have gross margin increasing. So everything's on the rise from the last quarter. The only downside, I would say, would be the guidance. The guidance revenue looked kind of flat, and EPS still growing. So that's where I'm at on ENPHASE. And if you look at it, right, yeah, this picture looks pretty terrible, right? It looks like a growth stock that just hit its peak and has crashed. This is a profitable company. This is not no NEO. This is a profitable company. We hit a low of $79 there, and we've been trading sideways the entire year, and now we're at 81. Kind of in no man's land, if you want to call it that. We very well could hit the 70s again, since we're kind of just in a free fall. We very well could hit the 70s. But what I'm really counting on is a double bottom here around, what is this? I think it was low 70s, right? It says 75-ish, somewhere in that boat. I'm hoping we get a nice double bottom and we start rebounding from there. That is my plan. I mean, you can't go wrong, right? Now, if you bought ENPHASE up here around the 130 mark, you're not looking too good, right? But buying ENPHASE at $80, I mean, I would say there's not much to lose, you know? This is the lowest it's been in a very long time. This company is still profitable. Their PE ratio just shrunk a lot. It's looking way more attractive than ever. Insiders, we don't have any sales. Some of these sales could just be to simply cover taxes or to simply just buy something. But we don't have any major sales. I mean, since what? Since May? In the last 5-6 months, we have no major sales. So, and actually, they're doing a buyback program. They just bought back around 435,000 shares. So we're not getting diluted. Shares are going down. The share count's going down. Earnings are going back up. EPS is going back up. EPS is expected to grow over 80% in 2025. So I really do think all of the bad stuff is behind us, and I think it's good moving forward. It's really just the guidance, right? But like I said, we have another interest rate cut supposed to happen November or December. Just depends on, obviously, the inflation data and all that. But I don't think solar's going to be as big as the government wants it to be, but I do think there's tons of room to get back, maybe not to exactly to where we were, but I think 2026 or 2027, I think ENPHASE EPS should be at all-time highs for the year over year. I think we topped out at $4.95 in a year, and we're expected to get that more than that in 2026. So, I mean, if you liked ENPHASE in 2022 and 2023, when it was over here in the 200s, 100s, 300s, if you liked it then, you should love it now at 80. I mean, double your money. All it has to do is get to 161. I mean, you get back to these levels, you've already doubled your money. So I really do think this could be the bottom, and we see a big fat rebound from here. That's what I'm hoping. That's my prediction. So I will be buying my 50 more shares. If my $80 limit price does not get filled, I might just fill it tomorrow so I can go ahead and sell 2 more covered calls. If I do buy, my average cost should go down to around $90, and that's probably right around where I would sell my covered calls. Probably around $90 to $95 would be about where I sell my covered calls from. So that's my plan with ENPHASE. Since the stock looks like it's going to close under my 95, I'm going to collect that entire $955, which will put me at roughly a 5.3% return. I did buy back my SoFi puts because I wanted to free up some capital to dig more into ENPHASE. So I'll have to run the numbers again. Maybe it might be 5.1, 5.2 now. But either way, October, we're looking at a 5% return with premium. I do have an unrealized loss on ENPHASE, but I'm doubling down. I'm going to get 200 shares and keep selling more covered calls. And I will not sell ENPHASE unless it is at my average cost or above my average cost. So my unrealized gain will never really be an unrealized loss. It will only be a break even and keep all the premium, or I'll get to keep all the premium and sell it for a slight profit. But yeah, I do not plan on getting out of ENPHASE until it is above my average cost. So that's why I'm staying with this 5% return in October, which is huge. My goal is at least 2%. So this 5% is awesome. And it is all thanks to this in-the-money covered call I did. I did this to hedge myself, which I'm glad I did, right? Bought it at 100, sold a 95 call. That hedged me very beautifully. So now I'm collecting $955, and in 11 days, sold it on the 14th, expires on the 25th. So, and it might even be worthless by tomorrow on the 23rd. So in 11 days, $955 credit. That's awesome. But that about wraps up the video, guys. Tomorrow we have Tesla earnings, so I will probably be making another video talking about their growth. Implied volatility is almost at 100%. That is insane. That is insane for about a $500 billion company. What is Tesla? Still around 500 billion, right? Oh, wow. 600 and so about a $700 billion company. 100% implied volatility. That is insane, man. But yeah, guys, I should collect this $430 tomorrow. So it says I'm down 1,200 right now. After everything's said and done, I should be down around 800. Then I'm going to buy 50 more shares, sell my next cover call, and we'll continue that for the whole month of November. I will probably sell a mid-November covered call. Don't look at these premiums right now because they are not accurate. But I would probably end up selling. If my average cost gets down to 90, I'll probably sell like 92 or something, just so I can profit a little, because I think we are getting to oversold territory. I'll have to look in the morning because I don't think the RSI updates after hours. But I want to see I think when you hit a year, it goes to the daily. Yeah, this is going by days. So look at this. What is the RSI right now? 21. Is that even real? 21? Wow. Let me go to 5-year. Let me get a better. So we were at 24 down here. Right now we're at, what does that say, 35? 35. So anything under 30 is oversold. We're at 35 right now. It may or may not update in the morning. I'm not sure. But still, 35 is pretty cheap. So I'm going to hope you can see right here, way up here, we look like we double bottomed there and double bottomed there. And then look at this fat recovery. So that's kind of what I'm banking on right there. Yeah, ENPHASE. This very well could. Hey, you guys, if you guys don't think this is a good buying opportunity, check back in with me in 12 to 24 months. And I want to see where this stock is. We'll do a 12-month update and a 24-month update. I would be willing to bet money this stock would be twice as high. In 2 years, I would almost be willing to bet that this stock could be at over 160. Just from all this tailwinds that have come in. So if you're bag holding it, I'm not worried. If you're bag, I would average down as much as you can. That's what I would do. If it was me, I'm going to average down as much as I can. This is not financial advice, but I'm not worried about this in the slightest. I'm actually excited to average down and to keep doing my wheel strategy, right? Because I don't plan on holding this thing. Just my main goal is to collect 2% premium every single month. But all right, guys, I'm going to quit rambling on. All right, guys, that's the end of the video. Peace.